Morning, students. This is our next topic, like cost accounting. This is very important topic for your future examination point of view also. And in this topic, we will discuss the topic about the distinguish between the financial accounting, cost accounting, and management accounting. Before we are going to discuss about this topic, first what is the meaning of cost accounting, what is the meaning of financial accounting, what is the meaning of management accounting. Last classes we discussed these topics. What is the meaning of cost accounting? What is the meaning of financial accounting? What is the meaning of management accounting? Once again, I repeat the topic. What is the meaning of cost accounting means? The cost accounting is mainly depends upon here only based on preparation of cost sheet. That means cost estimation, cost control, and cost reduction. The financial accounting is mainly depends upon here the preparation and presentation of financial statements and reports. The management accounting based, based on cost accounting information, based on financial accounting information, the management accounting will take the decisions and will formulate the policies. That is the main important themes of three accounting branches, that cost accounting, financial accounting, and management accounting. Let's go now. What are the differences between three aspects? Okay, here I have to distinguish mainly based on eight aspects. The first one is here objective. That means how to distinguish among all these uh, accounting branches mainly based on eight bases. That means eight aspects. The first one is here objects. That means what is the meaning of object? What is the objective of financial accounting? What is the objective of cost accounting? And what is the objective of management accounting? Let's go for first. The financial accounting objective is record transactions and determine financial positions and profit or loss account. That is the main objective of financial accounting. Already I told you the preparation and presentation of financial statements and reports. In that presentation and preparation of financial statements is includes record transactions, determine financial positions, and find out profit or loss of our business. These are the main objectives including in that financial accounting. That is the first. The second one is here. What is the objective of cost accounting? Here the cost accounting objective is ascertainment, allocation, accumulation, and accounting for cost. In this situation, we have to ascertainment of cost, allocation of cost, accumulation of cost, and accounting for cost in our business organization. That means in this situation, the first important objective of cost accounting is estimation of cost based on historical data, and also allocation of cost. Allocation of cost means allocation of cost in their production. That means uh, which branches having how much cost will include whatever the prime cost, whatever the factory cost, whatever the selling and distribution cost, whatever the administrative and office and administrative cost, they have to allocate. Then accumulated also is there. Accumulated means adding each and every stage cost. Then they will find out the total cost of the production. That is the first objective of cost accounting. Then coming to here the management accounting to assist management in decision making and policy formulation. Based on the financial accounting information, based on cost accounting information, the management accounting will assist the management in decision making and policy formulation. To take an example, in based on the financial information, if you are having any losses with the previous year, when you compare with the previous year, we are having losses at present year. Then what type of decision they will take? That type of information will provide to the management, this management accounting. That is the first objective of like management accounting. This is the comparison among all three aspects based on the objective. The first financial accounting objective is recording, that means the preparation presentation of financial reports. Here ascertainment of cost, allocating and accumulating and accounting for cost. Here assist to management or take the decision making and policy formulation. Okay, let's go for next basis of difference, the nature. Here the financial accounting is mainly preparation presentation is mainly based on the concern with the historical data. That means based on the previous year data, we are preparing the financial statements and reports based on the historical data. That means last month data we are using, last year data we are using, last 6 months data we are using based on the financial. That means historical data we are using in our financial accounting. Here in this cost accounting, concern with the both past and present records. That means both past and present recorded. It will take the like estimation of cost and control the cost. If they want to estimate the cost based on that past information, they will estimate the cost. If they want control the cost based on the present information, they have to comparison between two aspects. That means present. That means actual cost with targeted cost. And if is there any deviation, then they will take the right decision. That is also included here. The concern with the both past and present recorded data is also there. In this management accounting department deals with the projection of data for the future based on the financial accounting information, based on the cost accounting information. The management accounting, the main nature is deals with the projection of data for future, the future estimation and future decisions and future policies. This is the main nature of management accounting. Here the nature of financial accounting is concerned with historical data. Here the cost accounting nature is concerned with both past and present data. Here concerned with based on this, that means financial accounting information data, cost accounting information data, it will project the data for future. That is the key. Next one here, what are the principles followed in financial accounting, cost accounting and management accounting? What type of principles followed in our financial accounting, cost accounting and management accounting? Coming to your first financial accounting, when you want to prepare the financial statements and reports, how to follow the principles of GAAP. That means generally accepted accounting principles. Based on that generally accepted accounting principles, you have to prepare your financial statements and reports. Don't use your own knowledge. You must follow the GAAP rules and regulations when you want to prepare a financial statement. Then coming to your cost accounting, in that cost accounting, it small depends upon a certain principles followed by recording cost. That means you're also having some certain principles. That means if you want estimation of cost, if you want recording the estimation of cost, you have to follow some rules and regulations. That means if you want calculate the prime cost, in that prime cost is including here the direct material, direct labor, direct wages. Then all three aspects are added, comes under the prime cost. Then prime cost plus office worker factory cost, factory expenses, then you are getting factory cost. Then factory cost plus office and administrative expenses, then you are getting cost of goods sold or office and administrative expenses. Okay, these are the main certain principle we are following for recording cost is also including is there. And also based on that standard costing and budgetary control, we have to also follow some certain principles and rules in that cost accounting. In this situation here, the management accounting, they don't want to follow any principles. It small depends upon their personality decision. That means based on that two department information, that means cost accounting information, financial accounting information, they will formulate some policies. They will implement their business. They will take the decisions for getting more benefits. That is enough. When they want take the decision, when they want formulate new policies, they don't want follow any principles in the business organization. They can create their own decision based on these two departments information. That is enough. Okay, let's go for data used. What type of data used in that three departments? In the financial accounting information, they don't want to use any qualitative data. That means qualitative aspects are not recorded, only quantitative. Here, only quantitative aspect is recorded in the cost accounting. But in this management accounting, both uses, that means qualitative and quantitative concepts also, they will accept it. That is the data used among all these departments. Okay, let's go now for another one. This is reporting frequency. Financial accounting is mainly depends upon generally at the end of the year. The financial accounting report all their financial reports um, generally at the end of the year they will present and they will disclose to their stakeholders. But cost accounting, it's not required every year. When they are required, when they want by the management, when they're desired by management, they will providing some reports and require. That means data. That is the cost accounting information. Uh, that means if the management is having any problem, identify any problem in their production cost, first they will ask the managers where is the problem occurs, please identify. Then automatically the cost accounting manager will identify the problem, will based on the techniques and tools, standard costing or budgetary control, they have to identify, they will identify the problem and provide and prepare report and submit to the management. In same way here management accounting also is there and decided by management. Based on the desired management desire, they will prepare the reports and submit the reports. That means if the management asks what about our future policies, what about our future decisions, whether we want expansion or not, the management want to decide expansion or discontinue their production. When they have doubt in their mind, first they will ask to management. That means like management accounting manager. The management accounting manager will evaluate analysis based on the previous data. Then he will take the decision whether we want to expansion or discontinue that production. That is also including here based on the reporting frequency. The financial accounting is mal depends upon every end of the year, and also here when management is here, and same also management is when the management required. The next one here, the publication, basis of publication. Here published in case of companies. Here also include the published in case of companies. Here there is no any published activities, not published into the any places. Here also some management accounting also not published, but published in case of companies. This is also very important here, the publication of financial reports of financial accounting. Okay, next one, information recorded. What type of information recorded in these three branches? Here in this financial accounting, monetary transactions only. Financial accounting recorded only monetary transactions. That means financial activities, the financial transactions. Non-monetary transactions they did not record. That is the first aspect. Is coming to cost accounting, both monetary and non-monetary information they will require. Both monetary and non-monetary information they will require. That means how much cost of material, then what type of services we are acquiring from the outside. These are all information also including in this situation. The management accounting also same way. Both monetary and non-monetary information they will require for decision making. If they have decisions only based on the monetary information, that will collapse total business profits. That's why they will consider both monetary and non-monetary information also they will require when they want information recorded. Okay. The next one here, the forms of accounts. That means how you form the accounts. The financial accounts are prepared to meet the legal requirements. That means every end of the year, every company must and should prepare the financial statements and publish into the public and disclose their financial statements and reports. This is very important for legal requirements. The preparation of financial reports and records and statements are very important for meet the legal requirements into the financial accounting. But in this cost accounting, these are generally kept voluntarily to meet the requirements of the business. There is no any legal requirements for preparation of reports, but they have to maintain their own purpose, development of their business and improvement of their business and control of their business. The management accounting also same way here. These are generally kept voluntarily to meet the requirements of the management. Okay, there is no any legal requirements and for preparation of statements and reports. In this situation, they have to prepare only for their decision making and policy formulation and improve their profits. That is also including is there. Okay, this is the differences among all these departments like cost accounting, financial accounting, and management accounting. Let's go once again. I repeat. I remember the first base is objective. What is the objectives of these departments? What is the object of financial preparation of financial statements? Here, estimation, allocation, and control of cost. Here, for the purposes of make decision making and policy formulation. Here, the based on nature, based on historical data, based on both present and past data. Here, also including here, based on past data, they will decide the projection for future. The principles followed. The financial accounting followed gap principles. They must and should follow when they want to prepare the financial statements. Generally accepted accounting principles. Here the cost accounting they don't want followed any principles, but they have to maintain some certain principles for preparing cost like costing and some other costs it also is there. But in this situation, no set of principles are required for the management accounting. Here data used. What type of data they are using? In the financial accounting, there is no any qualitative data they are used that may not recorded. But in this here, only quantitative aspects is recorded. But in that management decision, they have to use both qualitative or quantitative data they are using. The next one, reporting frequencies. Here, generally at the end of the year, they have to prepare. In this situation, when the management require cost accounting, and same way management accounting also, when the management require, they have to prepare reports. Here the publication, the financial accounting, they will submit each and every end of the year. But in this cost accounting, there is no publish. Same way management accounting also there is no publish. Then here information recorded based on the monetary transactions only. In this cost accounting, both monetary and non-monetary, same management accounting also monetary and non-monetary transactions. Here the forms of accounts. The forms of accounts, financial accounting is mainly preparation for meet the legal requirements. But in this situation, cost accounting and management accounting, they don't have any legal requirements of preparation of reports, but they have to maintain their own business development and improvement. That is okay. These are the distinguished among all these departments and differences between among all these departments. Thank you guys. I think if you have any doubts, then ask me now. Then message me. Then if you have any other doubts, feel free to contact me. Okay, guys. Thank you, guys. Thank you for listening my class. Jai Hind. Thank you.